The number of insurers outsourcing investments to asset managers continues to grow, particularly in the U.S. life annuity industry. That according to a new AM Best report. We're joined today by one of the authors of that report, Associate Director Jason Hopper. And Jason, let's start with that growth. What are the key drivers there?
Sure, John, thanks. So I think there's a couple factors playing into the driving this growth. Number one is private equity asset manager companies that are starting to enter the life annuity space through a number of various ways, one being outright ownership of insurance companies, and in that deal they likely get to manage their assets. Number two, private equity and asset managers entering the life annuity space, but only through a partial minority ownership, say something less than 10%. But within that deal, they also get to manage a book or some of the book of assets of this insurance companies. So you have this new money coming in, likely getting higher yields from their investment expertise, right? So to kind of combat that, insurance companies that may not have historically outsourced assets now kind of have to in order to compete with that new capital coming in, which enables them to offer higher crediting rates and be more competitive within the annuity space.
Right. So in large part, companies are outsourcing at least part of their assets. What are you finding there?
Yeah, so outsourcing to investment managers opens up or allows some companies that may not have the in-house expertise or the resources to do the amount of extensive due diligence required to get into some more complex or alternative asset classes, such as other asset-backed securities, other types of structured securities, private credit, etc.
So what characteristics or traits should companies be looking for when considering asset managers?
Yeah, insurers look for asset managers that have a strong track record of favorable yields, right? They look for asset managers with extensive expertise in certain areas, and insurers are more likely to form partnerships and give their business to those sorts of companies that have those track records and are familiar with certain asset classes.
Jason, thank you so much for taking the time to speak with us today.
Thanks, John.
That was Jason Hopper, Associate Director. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.